Today we're going to talk about the new mortgage rules. Specifically, we're going to talk about the new mortgage rules and their impact on Canadians looking to purchase homes. If you are in Toronto and Vancouver, especially, this might be helpful because there is a sentiment, of course, that there needs to be something done in improving housing affordability and increasing access to home ownership in those areas and nearby regions. Now, these new rules are effective December 15, 2024. So let's talk about these rules and what they are. So, first one is expanded amortization for first-time buyers. Now, generally, the amortization period is usually 25 years. No, it's 30-year mortgage amortizations, and that's now available, right? No, because the amortization is extended. What's going to happen here is you're going to be reducing the monthly payments starting December 15, 2024, if you take advantage of this. In addition to that, there is a cap that's typically on insured mortgages, and that cap previously was a million. Well, currently it's a million. December 15 is going to increase. It's going to increase to $1.5 million. No, when you have an insured mortgage, and that's usually below $1 million, you're making a purchase for below $1 million, then there is some, it's the requirement for down payments are not as high as a home that's $1 million. Once it's $1 million, it now becomes 20%. As you can imagine, a million, 20%, at least 200,000. That's a bit relaxed, and now the insured mortgages will increase to $1.5 million. And so the down payments that you have to make will be a little bit lower. Now, what's the impact that this will have? Well, higher insured mortgage cap will primarily impact expensive markets, like I said, Toronto, Vancouver, where home prices often exceed $1 million. But there may be new, other pockets where it may be affected, or even areas that are close by. No, 30-year mortgages. From a financial standpoint, what does this mean? Well, it's a longer mortgage, and so typically what you're going to see is an increased long-term interest cost. So if you are going to be looking to do this, you may want to consider making additional payments in order to not pay that high amount for that long time. So these additional payments are recommended to reduce the mortgage term, right? So you may want to consider that. No, you may be just getting into the market and you really want a home. So the lower initial costs will be helpful in getting you in. But as soon as you can, what you want to start doing is making additional costs and lower that time period. Because again, we're talking about long-term interest costs over a longer period. So yes, there's comfort in knowing that you're paying a lower amount, but in the long term, you may be putting quite a bit more towards purchasing that home. Now, in terms of first-time buyers, the definition, based on what we've read so far, the definition of first-time home buyers include those who have not owned a home in the past 4 years. Just kind of broaden the access to the 30-year amortization. So it doesn't necessarily mean that this is your first purchase ever, but what you may want to do is, if you purchase a home, you no longer have a home and has been 4 years, gives you that opportunity. As we see, interest rates have starting to go down. Inflation is also starting to go down. So as inflation declines, the real estate market is expected to become more active with affordability offered by these changes. Individuals who previously couldn't meet the down payments or probably now have that opportunity, and that's good. But I think it's also still very important to look at your situation from a financial standpoint, from a number standpoint, and see if it is the best purchase. I know we have this emotional attachment to purchasing a home. That's something that you've probably gotten either from a cultural standpoint, from a family standpoint, and quite frankly, it may just make absolute sense depending on your situation. But you have to be grounded in the financial situation to make sure that it is the right purchase for you. And just because you can't afford it, look and see if in the long term it makes the most financial sense, right? So as we get closer to December, we will probably get more details around this, and I will definitely update everyone. But if you are looking to purchase a home and you've had challenges in the past, there's an opportunity. But if you're thinking from a long-term perspective, you also have to consider what that looks like, just to make sure that it makes financial sense for you. Hopefully this was helpful. And as we get closer to date in December, I will provide any additional updates. See you all next week. Take care.